Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. With us today, a new guest, a guy I've known about for a long time, but I didn't meet until a month or so ago. And hey, I'd like to have him on. His name is David Morgan. David Morgan, of course, has the popular website silver-investor.com. David Morgan, thank you so much for joining us today on USAWatchdog.com.
Well, Greg, it's great to be with you.
I want to just expand a little bit on your resume here. I'm going to link to your site. I'm sure you have an about or a resume on your site, but you have a master's in finance. You've worked in, for the Air Force. You've worked in Black Ops. You're an expert not just on silver, but on gold and silver. You've written books. You've been involved in this for most of your adult life. And I just wanted to have you on. As of yesterday, we had another little hiccup, another hit in the gold and silver market again, as the government is shutting down, which I find bizarre. People should be frightened out of their minds, in my humble opinion. But I have you on for that. Tell me what's going on in terms of this whole budget government shutdown and what's on the horizon for raising the debt ceiling, and what you think how tenuous the situation is.
Well, as far as the shutdown is concerned, I mean, it's a mini shutdown in my view, because all these whatever considered essential services continue. So certainly there's some that will be affected in government services, but there's many that really aren't affected. I think the bigger one is the debt ceiling coming up. Everyone, I should say everyone, but a lot of people in our camp that really understand fiscal responsibility and monetary policy understand that you cannot print your way out of this mess that we're in. I mean, we have a massive debt problem, and the only solution that the authorities are coming up with is to add to the debt. That will not fix the problem. Anyone with some common sense understands that. So there was the Graham-Rudman bill passed many, many years ago that put a debt ceiling in that says we cannot borrow more than this. And basically it's been ignored year after year, time after time, and we're up against it one more time. And I fully expect that it will be raised again. So it's meaningless. The problem is that the money becomes worth less, and it becomes worthless or nearly worthless at some point in time. The other problem is that our trading partners recognize the instability of the U.S. dollar. And they have done great measures in recent times, being the last year or so, where they are doing trade agreements vis-a-vis their own currencies. You go Russia, India, Russia, China, Japan, China. In other words, mostly the BRICS countries, Brazil, Russia, India, China, and South Africa, have opted out of the dollar in many ways because they're, again, doing trade agreements that circumvent the dollar altogether. On top of that, they don't really want to buy any more bonds. So that leaves the Federal Reserve as the buyer of last resort. And a lot of people who don't really understand monetary history think that this can go on ad infinitum. Greg, it can't. We're getting very close to the edge.
Some guy wrote me and said it could go on for 15 years. Actually, he said that Paul Craig Roberts said that. I've interviewed him several times. He's never said that. He never said it could go on for 15 years. Matter of fact, he's frightened. He said it could go on for 5 years, maybe. Mm-hmm. I don't know if that's accurate, but that's his longest window from the interviews I've done with the former Assistant Treasury Secretary and the father of Reaganomics. But back to you. So the debt ceiling being raised, I mean, you just brought up the BRICS country. They're not pulling the rug out from underneath us. They're just kind of sliding it out slowly, aren't they? Until they finally get to the edge and boom. Is that a good assessment of what's going on with the dollar and people using the dollar as a reserve currency around the globe?
I think it's a very accurate analogy. And as you state, it slides slowly. Most people don't notice it. Most people don't understand it or care to or aren't educated enough. And yet, as you said, as you slide along, perhaps, not always, there's a possibility that all of a sudden there's a quick, big anomaly. And you could have a big disruption in the markets very quickly, which we've already witnessed in 2008. I want to go back again to the debt ceiling situation and also Craig Roberts. I was criticized myself and many in our camp some time ago about, well, you guys have been saying this for a long time. And, having an engineering background and having worked in the aircraft industry for a short period of time, I'm a pretty good thinker, excuse the ego. But when you do integral calculus, you look at all possibilities from 0 to infinity. So I went back and looked at checking our premises and said, there's a limit. And the limit of how much money you can print where it has an effect has been reached. The Keynesian model is that you can stimulate the economy by adding government bailouts or government stimulus in whatever form and get the economy going again. And you know what? That works up to the limit. And the limit is when you do QE1, QE2, QE3, taper, and everything else, and it doesn't work. Greg, we've reached the limit. And that's why I would agree with you that we are not going to see this thing go another 15 years. I doubt another 5. I'm forecasting 2 to 3 at the most.
What happens if this debt ceiling fight turns into a real fist fight, and our bond market gets damaged? I mean, isn't it GameSet Match? Isn't that martial law? Or the checks finally start stopping for everybody, and half the Americans, almost half Americans, are on some type of government check. I mean, what happens if this debt ceiling fight? Because they said, they wouldn't shut the government down. Well, they were wrong. They were wrong. And now they're saying, no. Well, they'll come up with some kind of a dealing with the debt ceiling. I'm not so sure. I mean, what happens if even if they do get a deal, but the rest of the world says, yeah, we're done with Treasury bonds. Yeah, we're completely done. As a matter of fact, we're going to start selling even more than what we're already selling. What happens? Is there a scenario that you see that this thing could end, like David Stockman says, anytime from now on? You just said that last week, that this thing could end. What is your scenario for an end game?
Well, I'm much more on the David Stockman side than, let's say, some of the more mainstream people. I wouldn't go as far as what you implied, but I would say that, first of all, I do not see a hyperinflation. I see more disruption or a currency crisis. You don't have to have a hyperinflation to have a currency crisis. And a currency crisis is where basically the currency is shunned by the people at large, but it doesn't have to be the population of the U.S., which is only 5% of the world. It's already being shunned, as we talked about, by nation states. That's probably more important than 5% of the world's population. So what would I expect? First of all, no hyperinflation, because in advanced capital markets, the bond market is a self-regulating entity. Why is that? Because when interest rates are forced higher, because you have to be a sucker to take U.S. debt, interest rates are forced higher, which pushes bond prices down. And that's deflationary. So it's sort of a self-governing thing. But if you're a big bond holder, big pension fund holder, you're Bill Gross, you're anybody, you're China, you're Japan, and you see your U.S. bonds cut by 20% because interest rates have surged, for 4 weeks in a row, that is a big, big problem, and that's what you're implying. So I'm seeing that possibility, not to that extent, because once this thing starts, then who knows where it's going to go. These kind of markets can get in a panic mode fairly quickly, and there's nothing bigger or more pervasive or more ubiquitous or a bigger problem than the debt bubble. And the debt bubble is primarily the U.S. exporting this inflation around the globe and has been doing for a very long time. So, Greg, I don't know exactly how it will unravel. I know it's tenuous. I know that anything can happen. A spark could ignite it, and lots of scenarios. I just want to point out the fundamentals that we could all agree on, that with an increase in interest rates, bond prices come down, which are somewhat deflationary. So China looks at their balance sheet and says, oh, my God, we've lost 20% of our U.S. holdings. We're going to bail out even more. So it becomes a feeding frenzy. They'll start offering these things. I've done this in the past. I haven't done it in a very long time. But I used to show a short clip from the movie Rollover. I'm sure it's on YouTube now. And you could go see what happens when there's a panic selling. And just type in YouTube, type in Rollover, and watch what happens when the Arabs withdraw their money from the U.S. So this is a hypothetical situation, but it's very accurate as far as what happens in a let's sell and get out of the dollar scenario. So I think that's fairly accurate.
That will bring us to yesterday's action in gold and silver. I know they're whacking, and the people who've been involved buying in the last couple of years are feeling pretty pregnant right now. They feel like they've been taken advantage of, and they've mentioned people like you. David Morgan told us to buy silver at 35, and Jim Sinclair told us to buy gold at 1,600. And I think it's not a price in U.S. dollars. I think it's a possession issue. I've told people that it's not about trading. You're thinking like a trader. I bought it, 35, and it's 21 or whatever it is today. Tell me about the price action in gold and silver, and also the CFTC shutting down after 5 years, which you have an investigation for 5 years, and took you 5 years to figure out nothing's wrong. It's outrageous. First of all, price action in gold and silver, CFTC shutting down its investigation.
Okay, the price action. First of all, I think you have to do the paradigm shift, because an ounce of silver and an ounce of gold has the same mass always and everywhere in the universe. So they don't change. They are constant. A dollar, by definition, is 371.25 grains of fine silver. A dollar is a weight of silver. That's the definition of a dollar at law. It still exists. So what you really want to do is think, do I have more coins or less coins than I had last year? And if you have more, you're by definition wealthier, regardless of the paper price on a temporary basis. Now, I know that doesn't sound too cool to someone that bought silver at 35 or 40 or something like that. Nonetheless, you have to understand the fundamentals have never been stronger for owning the metals. And as I've watched many of your shows, Greg, and you said it could come down to either you own it or you don't. I mean, let's take a hypothetical and say that there's a banking problem or some kind of electronic transfer problem.
Let's say Cyprus. Let's say we have our own Cyprus right here.
So I think you must take a balanced view. I've never been like all in gold and silver. I've recommended as high as 20%. People that don't know my work or they hear it by hearsay or someone in a chat room, which I don't bother with, but nonetheless those things exist, and they might get a misjudgment of what I really do and what I purport. I really think that in today's environment, everyone should own at least 10% in physical metal, and I'm not a bullion. So that's one. Two is really under the current environment, I think 20% is more like it, but 10% is probably sufficient. Coming on the CFTC story, I put out probably 3 or 4 videos from interviews like this one on it. First of all, to be fair and balanced, and I'm not Fox News, they did not say we didn't find any manipulation. What they did say was that we didn't find enough evidence to go further in the investigation.
After 5 years.
After 5 years. So this is absolutely preposterous. And I want to say, Greg, for the record, that many of the people that are subscribers and some that aren't have forwarded me emails that have gone to Bart Chilton and what his responses have been. So I've seen these things come in throughout the years. Not all of them, of course, but randomly here, there, and everywhere. It looks to me as if the manipulation case certainly was given evidence to the CFTC. I think that's without question. I talk to Andy McGuire about once a month. So just because they have evidence of manipulation doesn't mean they can prove it. So if you read it like a lawyer would read it, what they said was we don't have enough to move on. We can't prosecute anybody. And those are my words, not theirs. Forget the word they use. But we don't have enough to go further for any employee or any entity with this quote-unquote manipulation. So I don't necessarily agree with that, but I'm not a lawyer. I'm not a legal scholar. But I think that we can say that they probably had enough stuff to certainly carry it on for 5 years. And then to reach the conclusion they reach is very disheartening to all of us, but nonetheless, by the letter of the law, perhaps correct. At least that is their definition. One further point, there were several lawsuits against J.P. Morgan for manipulation, and the authorities decided to combine these into one general outlined lawsuit, which unfortunately watered the milk as far as I'm concerned, because I think every one of them had merit and should have been tried on an individual basis. But again, the powers that be, I mean, we're basically going to them with our hand out and say, please, please, please do the right thing. Well, when has the right thing been done since the Kennedy assassination? And, in your opinion, Greg, when has someone really stood up and done the right thing from an authoritarian position, meaning the government at large? And I'm sure there are some. Look at Ron Paul and others. But at large, I mean, basically there's been criminal acts that have gone on in the futures markets and other markets for a very long time, and yet nothing other than a few hand slaps seem to go on. Yeah, there's the Bernie Madoff, and he's in jail, and on. But really, the whole system is so corrupt and protected, it seems, in most cases, that I think the people at large are getting very, very fed up. And for me to think that the authorities are going to do the right thing, I think it's more or less a waste of time. I think it's important for people to understand it goes on. But to think that something will really be done about it, I think is whistling past the graveyard. Nothing's going to happen.
Well, something's going to happen at some point. I mean, we want to talk about the true price of gold and silver, what you think, which is probably much higher. But when you're suppressing prices, and that's what a lot of people think, that interest rates are suppressed. The bond market interest rates are suppressed. The stock market is propped up. That's clear. Gold and silver prices are suppressed. Stocks, as I said, are Bernanke said he wants people to go into the stock market. Anyway, the long and short of all of this is, with these fire sale prices for gold and silver, can't COMEX and LBA run out of physical metal, or cannot, and reach a point when they cannot or will not deliver? And is that day coming soon, or do you know anything about it?
Well, I do. First of all, I had this conversation with one of the bigger bullion dealers in Canada, and I'll just quote him and quote myself, and that's read the contract. If you have a contract with the COMEX, basically it says in the contract that you can be forced to sell for cash. So these people that say, well, could they run out of gold or silver? The answer is absolutely they could. In fact, it's so tight in the gold market. The amount of gold held by the COMEX is so pitifully small that it's ridiculous. It's an amount of money that is available to Congress to spend that they don't have in a matter of just a couple of days. That would take care of the whole gold market, not the entire gold market, just the pitiful small amount, the physical gold that's in the registered category at the COMEX. So it's a one-off. There's absolutely no reason why it couldn't be snatched up. But the contract would say, oh, no, it's not a default. Read your contract. We can make you settle for these private banking certificates called fractional reserve notes or Federal Reserve notes. So could they default? Technically, no, not by their law or by the contract. Could the amount of gold that's remaining in the registered category be snapped up in a heartbeat? Absolutely, it could. And I think, that would be a nice game to see played, but I think the authorities would back off and say, oh, wait a minute, we've got a problem here, blah, blah, blah. Who knows what they would come up with?
Yeah, but you're saying they can't default. But, okay, in theory, they can't default. But when they stop delivering gold, isn't it GameSet Match at COMEX? If they stop delivering silver, isn't it over? And when could that happen, if it could happen? Well, if they stopped delivering, wouldn't it be GameSet Match?
I think it would be closer. Since it's a world market, you would probably see huge disruption. You'd see a two-tier system where you'd have a COMEX price and a real price, which we already witnessed in 2008, especially on the silver side. They would probably continue to function with their funky derivative price, which would be meaningless in the real market. So it would cause great disruptions. Whether or not it would be over, I don't know, Greg. I kind of doubt it for a while. I've always suggested that in a true default, however you define it, that they could go to a cash market only. And a cash market only basically takes it off the exchange. And this is not such a bizarre idea, because if you go back and study commodities, you used to have an egg market. In other words, a dozen eggs. Of course, it was not sold in dozens like the supermarket, sold in great lots. Same thing with milk. Those used to be commodities that you could trade on the exchange. No longer exist, but you could, last time I checked, you could go to the grocery store and buy eggs and milk. So the point being is, if it went away, which I think would be good, these other markets that deal more on the physical side of things would probably have more of a free market price. But the reason that they have the prices they have, as you well know, is that these derivatives markets are so huge and so vast, and most settlement is done in some type of currency or another. It's not done in metal for the most part. And because of that fact, there is the ability to exert downward pressure in these markets, even though it's mostly naked or non-existent metal.
Which drives me crazy in CFTC. Naked short selling, I guess, is legal in the commodities market. What's the true price of gold and silver? And I have one last question to dovetail in. And what do you tell people who are saying, that David Morgan got me to buy silver at 35? I have people writing me. Not all people. Most people get it. But some people are, I don't know if they use your name, but what do you say to people that say, I bought at 35, David Morgan. Now what? What's the real price? When's this going to go back up? What do you say to those people?
Well, the real price, I wrote an article that was one of the first. It's still on the website, and there's a lot of free information on the website, by the way. In fact, I'll point out that Charles Savoy wrote for the Silver Investor website for years, and he's probably got the best researched conspiracy theories, if you want to call them that. They're really not conspiracy facts, on how silver has been really the monetary metal of the world and more suppressed than gold, if you care to look at it. But back to your question, the true price. I did one article called Engineering the Price of Gold, which is an extremely easy arithmetic problem. You take the amount of currency in circulation divided by the amount of ounces of gold, you get dollars per gold.
And what is that?
If you did that 10 years ago, the true price of gold would be $2,500 the ounce. And that was about 10 years ago.
What about today?
Yeah, so today, I don't know, because I haven't done the arithmetic. It's very easy, but it's probably around 5,000 to 7,000. So I'm right in line with the Jim Sinclairs, the Jim Rickards, and those guys. James Turks, perhaps.
You're saying the true price of gold right now, with no calamity upon us, even though it's an unfolding slow motion trade wreck, you're saying it's between 5,000 to 7,000 for gold. How about silver?
Well, silver is tougher because it's not considered to be a monetary metal by the banking institutions. So you could take a ratio and you could either do the current, 50 to 60 to 1, divide the price of gold by that amount, say 50, into 5,000, you have $100 silver. But if you believe what I believe, that silver actually outperformed gold, to go back to what I call the classical monetary ratio and divide it by 16, you'd have a far higher price. So I think that both gold and silver are far higher. Again, I don't like to put paper prices on there, but that's one way to do it, is to look at the amount of currency divided by the amount of gold. And Greg, I think one of the more important things to look at is that hypothetical arithmetic problem. That's assuming there's 165 million troy ounces of gold held by the U.S. Treasury. But, there's a lot of guys like Bill Still and others that claim that there isn't any gold in Fort Knox, or the amount that's there is much, much smaller than the amount that the Treasury reports. Because when they report it as a one line item, gold. But if you read the fine print, it could be gold swaps, deep storage gold, and on and on. So what is the gold that they claim they have? Is it a bunch of derivatives? I would very much extol the fact that it probably is a bunch of paper gold and very little physical gold. So the amount to back the U.S. dollar is probably much, much less than what's stated by the Treasury.
And the final question, what do you tell the people who bought silver at 35? You're a silver expert. Silver at 30, silver at 25. What do you tell people? Do you say, hey, you're investing in it for just a quick profit, or you're trying to, basically invest in case there's some sort of government calamity, which looks pretty calamitous coming down the tracks at this moment? What do you tell people who bought silver at $35 an ounce?
Well, first of all, for the record, as silver made a huge move in early 2011 and went from 19 to 48, I do trade and invest both. Not many people can do both. I know the volatility of these metals, so I think it's important, if you can, and have the mindset, most people don't, to go ahead and take advantage of these big moves up and down if you can.
You're actually advocating trading your insurance, aren't you?
No, what I do is the insurance is in a separate basket and is never touched and only accumulates and added to.
A core asset. Absolutely.
Don't touch it. Don't mess with it.
Have enough money that you can invest a core asset and just have it.
And for most people, that they don't go to the next step. For those that can, it's very gratifying when you can play their game and beat the bankers. And so when you see silver go from 19 to 48, and I got out right at the top, it's gratifying. Plus, it takes your average cost down. But it's a paper game, and I fully recognize that. Anyway, I called the top at 48. I don't recall telling anyone to buy at 35.
Yeah, I'm not saying you did. I'm just saying people.
Basically, look at the reason you bought it, and see if the reason you bought it still exists. And if it did, man up, hold on to it, and buy more as you can. I've always advocated for most people to dollar cost average. The best thing you can do is take a long range view and buy a little bit every month, or buy a lot every month, depending on what you can afford. To think you can pick the top and the bottom every time is a fool's game. I'm pretty good at it, but not perfect. I've called every major top so far, but I missed the bottom. The 2008 bottom I thought was 1250. Turned out it went under 9 very briefly. But nonetheless, I've called the bottom here for the record, Greg. It was around 1837, I believe. I said that's it. It was a key reversal on the 28th of June. I believe that's the bottom.
So you're a buyer here. You're telling people if you bought at 35, and I'm using that number. I know you didn't say that.
On the record, I said anything under 30 is a great buy. Huh? And, of course, been under 20. And so, am I right or wrong? Well, until we get above 30, I guess I could be called, quote, unquote, wrong. But, again, I think you have to think in terms of ounces. Do I have more ounces? Do I have it? Because it could be a day, and I really believe this, and this is before – this is going back 4 or 5 years ago. I think there'll be a day this time in the precious metals where you just plain can't get it. Not that you couldn't go to the coin dealer and maybe get a Numi coin or a rare coin or, a 10-ounce bar. But when an Eric Sprott comes in and says, I want 25 million ounces of bullion, I'm going to say, sorry, it can't be done. Just like your earlier question. Well, what happens when the COMEX says, we'll give you the equivalent in paper, But forget the gold, forget the silver. We can't give you that. Check your contract. We're making settlement. We haven't failed. Well, of course they failed. But I think that day's coming, Greg. I really do believe that.
How close are we to that day?
Well, I wish I knew. I'm going out probably a couple more years, 3 at the most. I don't see this whole thing holding together for through 2016 or so. I think that's about it. I really can't see this thing going on another 10 years, especially with what's going on in China. I'm just finishing an article for this month's Morgan Report asking if the super cycle in commodities is over or not. And I'm making a hard case that it's not over. But even if it is over, the gold and silver scenario is actually better because the scramble for the best asset of all time. See, commodities are needed, not wanted. You need commodities. And I said in 2000, the big shift was taking place from paper assets, i.e. the stock market, the tech bubble, into what you need, which is commodities. And if you check the charts, we've been in a major uptrend for commodities basically from that time till now, and somewhat of a downtrend in real terms if you take the inflation lie out of the stock market. But people need to live on commodities. But if there is a disruption, they go for what they need the most, which of course is food and water. But after that, any extra left over would be their financial assets. And the only monetary asset outside of counterparty risk is physical gold and silver. It's that simple. That's the one asset class that's on one side of the fence, and everything else is on the other side. Stocks, bonds, pension plans, annuities, options, futures, you name it. I don't care what you name. There's a counterparty risk and probably electronic transfer that's required. So if you don't have something that's outside the matrix, I think you're living in la-la land because we are in a matrix. And we're in this controlled financial media, this controlled financial paradigm that you really can't escape unless you're bright enough to understand the basics. And the basics are gold's been money for all of recorded history, basically. So has silver. Silver's been money actually longer times and used much more than gold as money because it's the people's money. And again, if you don't have some and things go awry, even temporarily, you may be in a position to wish that you had.
David Morgan, silver-investor.com. Thank you so much, David Morgan, for being on USAWatchdog.com. Once again, David Morgan, silver-investor.com. Thanks again.
My pleasure. Thank you.